Welcome to our channel, Options and Ideas. Today we'll be learning a topic on old tax regime versus new tax regime. Today, I, Shilaita Bhattacharya, has made this lesson for you with the help of my mentor, Dippaman Chakraborty. He is the CEO of Options and Ideas. So let's jump to the topic. So in our first slide, we have the definition of income tax. It is quite obvious, we all know the basic definition of income tax. Income tax is a tax charged on the annual income of an individual or business earned in a financial year. The income tax system in India is governed by the Income Tax Act 1961, which lays out the rules and regulations for income tax calculation, assessment, and collection. All taxpayers are mandated to submit an income tax return, which is also known as ITR, every year by respective due dates as per the law to report their income and claim a tax refund if applicable. An income tax return can be filed either online or offline on the income tax department's official website or through verified third-party websites. The the Indian income tax system also includes various deductions and exemptions that can be used to lower the tax liability for a given financial year. Now let's know about the ITR filing last dates. For the individual HUF, AOP, BOI for non-audit cases, the date is 31st July. For the businesses that record audits, it is 31st of October, and for the businesses that record transfer pricing reports, that is 30th November. Now let's come to the next. So in this slide, we'll be discussing about the tax slabs for the assessment year 2024 to 2025. First, we have the old regime. In the old regime, there are five slabs. That is up to 2 lakh. The first slab is up to 2 lakh 50,000. The next is up to 3 lakhs. Next is up to 5 lakhs. Then 10 lakhs, and last one is above 10 lakhs. And here are and in this column there are individuals, the resident senior citizens, and the resident super senior citizens. The following are the tax rates. Here you can just pause the video and have a look, and you can get a detailed view of the tax percentages. Here we can see the tax slabs of the new regime. Here in the slabs, the first slab is up to 3 lakhs. Then the second is up to 6 lakhs. Then it is up to 9 lakhs. Up to 12 lakhs. Then 15 lakhs, and the last one is above 15 lakhs. And the rates are in the first slab, that is nil, and the next is 5 percentage, and then 10 percentage, then 15 percentage, then 20 percentage, and the last one is 30 percentage. Now let's see the standard deduction and the relief. In this standard deduction and relief, for the old regime, the income level rebate eligibility is 5 lakh, and for the new regime, it is rupees 7 lakhs. And the standard deduction of 50,000, it is applicable in the old regime, and it is also applicable in the new regime. And professional tax will be applicable in the old regime, and it is not applicable in the new regime. And the section 87A relief, it is up to 5 lakh, the relief is 12,500, and in the new regime up to 7 lakhs, the relief is up to 25,000. Now let's come to the next slide. Here there are the key deduction that is not allowed in the new regime. Here you can go through the slide minutely and have a quite good amount of knowledge from the slides. Here the sections are there written, and the exemption and the maximum limits are written. I am not going in the detail. You can just pause the video and have a look on this slide. And in the next slide, we have the deduction and the taxable income. Here in this axis, it is the deductions, and in this the gross income is written. And here in this matrix, and what will be the means what will be the amount of deduction that you will get on behalf of the gross income. Here in this matrix you can see it properly. You can pause the video and have a look on the and have a detailed idea of the deduction on behalf of the gross incomes. Here we come to the conclusion and the end part of our presentation. In the conclusion, we can say that the old regime offers various reduction and exemptions, making it potentially beneficial for those who can maximize these benefits. The new regime is simpler with lower tax rates but does not allow for deduction and exemption. Then choosing the right regime. It is very important that which regime you choose to evaluate your income, eligible reductions and exemptions to determine which regime is more beneficial. The old regime may suit those with significant investments and eligible expenses. The new regime may be advantageous for those seeking simplicity and lower rates without tax saving investment. So this depends upon your income and the expenses. So in a nutshell, we can say that you can go for the old regime or in the new regime on in the respect of your income and the expenses. For further clarification, you can contact us. Here is the detail. Here is the detail of our address, and here are the two numbers I have given. This is the mobile number, and this is the official number. And here is our official website. Here you can just contact us and have a detailed discussion on which regime you can choose. That is the old regime or new regime. So here we come to the end of our presentation. Thank you everyone for your time. So if you want any suggestion about and if you are confused that which regime to choose, you can obviously contact us. The contact details is given in the previous slide in very detailed, so you can contact us anytime. Thank you.